Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bank, ladies and gentlemen. I'm Gadia. We have with us Riya Singh, technical analyst, Currencies, joining in. Riya, welcome to the show. Riya, let's understand as to what has been the impact of the Fed statement that has come in with regards to where the dollar is concerned. Because clearly, if you see with regards to what the Fed has done is they have maintained a status quo with regards to where the rates are concerned. Their stance also pretty much, overall remains in tandem with what the street was expecting. And they've clearly said that, the recovery is uneven and far from complete. Inflation pressures could rise in the coming months. And it's still not time to talk about reducing policy accommodation, including the asset purchases. Now, taking these comments into consideration, the immediate impact on the dollar, and from here on, how do you see it moving?
Rightly said, Virat. See, we were quite expecting that there will be hardly any change into the Fed stand for the coming for the recent Fed meet, and it had happened. So now what I was expecting is what will be the statement that will come forward after the meet. It would would have put quite an impact, but it turned out to be a non-event for the dollar itself because like you said, the statements that they have released is they are far from removing the support from the economy right away. But there is then again a contradictory statement that the Fed said that the recovery is coming forward into the economy, though it is even, but it is coming, and it is at a pace that was not expected. So it's coming quite quick than the expected rate, what the Fed was looking at. Now then there was another concern with respect to the inflation. Now Fed has been working quite towards getting the inflation rate at 2%. But now what the concern is whether this inflation will shoot up beyond the targeted ceiling. So towards that, the attitude remains that it is not much of a concern. It's a one-time thing. So there is not much of concern towards the inflation target or if it shoots up beyond the ceiling target. And plus, obviously, if Fed is looking forward to that the economy is, recovery is being recovered from its, pandemic situation. So all we're looking forward to as to what the trajectory will be with respect to getting the rates up, or how fast, or what will be the timeline with respect to removing the support from the economy. But like you said, there has not been a much change, and in fact, there has been two new fiscal measures agenda that have been put forward into the pipeline with respect to the another they had already been signing 1.9 trillion towards the pandemic relief, and plus there is another 1.8 trillion towards education, and then 2.25 trillion towards the infrastructure proposal. So these two amounts are very huge amounts. Apart from getting the balance sheet expanded by doing asset purchases and so forth, another such you committing to a huge amount to be influxed into the economy. So there again will be a printing money that will be happening. So I think the looking all this into perspective, and there will be more monetary support that will be coming towards the economy. So I think they'll continue with the word of getting the maintaining the rates low for another year or so. So for the dollar index on a shorter term, I think it will remain into a weaker zone, considering the more printing of money that is again has come forward into the picture. So not much of a bullish side you can expect on the dollar index, and the range will remain 91.20, 90 levels at least on a shorter term.
Right. So that's with regards to where the dollar and the dollar index go. What's the view that you hold right now for the Indian rupee?
For the Indian rupee, I think there's quite an unexpected appreciation that has come forward into the rupee. So this has happened owing to the weakness that we are seeing into the dollar index, and plus the domestic market has been performing quite good. So there is an impulse coming towards it. And if you look yesterday, there has been quite relaxation into the oil prices as well. So this has played into the rupee appreciation, but taking into consideration uh, the target that the central bank has, I think there will be gradually depreciation again coming forward too. Even if you look into the today's intraday sessions, after correcting for three sessions together, there is a support that is coming forward into the May contract towards 74 to 74.15. So that is a major support for the Indian rupee, and uh, the sideways momentum and the support that it has observed in today's session states that the weakness that we were seeing into the contract would would be phasing out quite soon. So I think there could be a reversal that can happen again, and there can be a gradual depreciation that could happen towards at least 75.40 on a shorter term.
Right. So that's with regards to where the Indian rupee goes. So taking the current market situation into consideration, what are the kind of strategies that you would recommend?
The strategies that one could go forward to into the Indian rupee pertaining to the intraday sessions that we have witnessed today, I think there can be a reversal that could happen. So you can go long into the rupee above 74.43. That is a major resistance. So 74 beyond 74.43. You can go long into the Indian rupee for a target of 74.57, 74.75. Maintain a strict SL at 74.15. Pound and euro has been benefited from the weakness into the dollar as well. Uh, so you can go long into the euro INR above 90.23 for a target of 90.37, 90.55, 59. Keep a strict SL at 90.05. Uh, and the next strategy that you can go long into is pound INR above 103.75 for a target of 103.97. Keep a strict SL at 103.55.
Right. So these are strategies that we should be watching out for as well. Thank you, Riya, for your view with regards to where the dollar and the rupee go and the strategies. Thank you, participants, for joining in as well, and sorry for the delay today.